Hey traders, Raghee here, and in this recap video, we are going to cover the anatomy of a meltdown. Now, this meltdown isn't something we could not have seen coming, because even by the latter part of Sunday, 7 p.m. Eastern, we had already seen the red grab candles and 5 propulsion dots start to make their way into the market. And that is a clue, a heads up, that there's going to be acceleration to the downside, potentially. We had a whole slew of Darvis levels that one by one just fell. So support level after support level was just run through. By the time we got the Facebook news and that began to drag the S&P and the NASDAQ down, we know that we were dealing with a lot of pessimism in the market. And here's the dangerous thing. A lot of times traders start to think, well, I'm going to pick a bottom. I'm going to pick a bottom. And eventually, they may be right. That bottom picking, which doesn't even sound ladylike from where I'm sitting, but all that bottom picking actually ignores the fact that there is a flow to the river and it is down. In fact, your entry with the least margin for error, and this is huge, the margin for error is much lower when you're going with the trend versus trying to find where a downtrend could find a bid. Now, the way in which I will anchor myself, visually anchor myself to a direction as a day trader, typically every day, will be using the 60 and the 5. And when the 60 and the 5 have both chosen the same direction, and preferably are both moving with red grab candles and dots, then I know the opportunity for the short side is open. The tricky thing I feel about this particular meltdown today was the way in which it accelerated and a lot of the chop that it exhibited down through the 11:30 to 1:30 time frame. So that's another thing I want to mention. Be very cautious of new entries between 11:30 and 1:30. Now, by and large, it's not going to keep you from getting whipsawed or whipped by the market action, but it will keep you out of a lot of choppy, indecisive action. And even after 1:30, going into 2:30, this market really didn't find a direction. It's only into the close and even into the latter part, the post-market, the post-415, do we see a little bit of the rally here. But the tricky thing about this current environment now is the 60-minute is still very much red in propulsion. So this is counter trend to me. Through here, the 5 and the 60 were in sync. That's what I want to see. I want to see that they're directionally in sync. And then once we have this, I want to be a little bit more cautious because now they're going out of sync. And so even as a day trader, I will use these longer term time frames to visually anchor myself. The S&P did not have the same confirmation, not as visually clean, for example, as the NASDAQ did, because the sell-off wasn't nearly as dramatic. So let's talk about the drama of a meltdown, the anatomy of a meltdown, and why I would say the NASDAQ melted down, but not so much the S&P or the Dow. And that has to do with the price range movements, specifically the price range movements per hour, per day of week. The NASDAQ was way out ahead, of course, with the Facebook news, with the weakness, and it quickly exceeded the Monday levels. I mean, this took no time at all for the NASDAQ to sell off 85 points. In fact, we were there before the bell even rang. It took it even less time to get through the 120-point sell-off. So again, right away, we're up at what I call the 68% level probability. We're already kind of up at the higher end of that. We broke the Monday, and now we're at the week, what the highest level for the week tends to be. Once we exceed that, we then start to think about, well, what if we sell off by another 145 points beyond approximately the 120 that I'm expecting anyways? Once we get beyond that, which we did, I start to look at what's known as a 2x number. 2x means What if we sell off 120 times 2? What if we get a 240 point sell-off? And quite frankly, we were very, very close to that. In fact, 6,800 was the 2x number, and we bottomed out at 6,820. That's 20 points in the NASDAQ is really nothing. So the whole way down, we had different ways to measure the extreme way in which the market melted down. And having these measuring, it's almost like having mile markers on a highway. You kind of know where you are in the perspective of your drive. In this case, the drive south. So just a few tips to keep you on the right side of the market, to keep you acknowledging where exhaustion could be, and to keep you from stepping out in front of organized bearishness or bullishness, but to keep you on the side of the market that has the highest margin for error. And today, that was the short side.